Hello and welcome. You're watching the Smid Show here on NDTV Profit. I have with me Mahima Varsajani. With me is also Mihika Barve. And we have with us Rohan Shah, Director, Finance and Group CFO at Deep Industries. Now, very large order in comparison to their current order book of nearly 1250 crore. The new order is worth 1400 plus crore. So we're going to talk to Mr. Shah about this order. It's an interesting one. Now, roughly 3,000 crore in terms of market cap for viewer perspective, but a 1,400 crore new order win. Mr. Shah, talk to us about this order, what it entails, and how much revenue on an annualized basis is this likely to generate, because it's a 15-year tenured order. So talk us through a couple of those aspects.
Yeah, we are quite excited on winning this order from ONGC. So this particular contract is for production enhancement of their mature fields. So with this contract, ONGC wishes to increase their hydrocarbon production and to develop further their reserves. So this particular contract can increase the production of mature fields over a period of time. And in that, we can get our service revenue as a share of incremental production. Right. Yes, this contract is for almost 15 years, but we are quite confident that we can complete this contract well within time or even before the given timeline.
All right. And Mr. Shah, this is, the first production enhancement and contract that you have, in your basket. So I want to understand that, how do you plan to play this from a long-term perspective? Also, do you expect more such orders going forward?
Yes, so this is for the first time ONGC came up with a production enhancement contract, and this is first round with which ONGC has started this, and we are expecting a few more rounds coming from ONGC itself. And with other PSU clients also, they are coming up with such production enhancement contract. And we believe in this industry, since we are more than 3 decades old, we have a great advantage to get this type of contracts even in future.
Yes. Good morning, Mr. Shah. Mihika this side. Since this is the first of the, first kind of, project enhancement operation orders, could you kind of give us a margin picture? Because, you do enjoy healthy margins in terms of your other segments. So, first margin profile of such orders, since you expect more to come by, and also the market opportunity in terms of size, if you have some estimate on that.
So margins would be again excellent in this production enhancement contract as well. So as you rightly said, we are operating on good EBITDA margin, more than 40% in our other verticals. And from this particular vertical also, we are expecting a good amount of margin going further. And with regards to opportunity, since it is the first contract we have received, though we were eyeing on this type of opportunities for since last 6-7 months, and we believe adding further such type of contracts will definitely help us in improving not only our top line but also our bottom line.
Okay, Mr. Shah, you suggested that the tenure, while it is 15 years, you're going to execute well within that tenure. What would that timeline be? Sub 10 years or maybe 10 to 12 odd years? Is that how this is expected to play out? And also, if I can understand, on this order alone, what would the incremental margin be like, and therefore will it impact your blended margin, your overall margin?
Yes, so as I said, we are quite confident to execute this contract well within this timeline of 15 years. So our expectation is to complete this contract in range of 10 years itself. And with regards to margin, it will definitely improve our overall margin.
Mr. Shah, so then we want to understand that in terms of quantification, where will your blended margin stand at with respect, in cumulation to this order? So by the end of FY25, first thing, and if you expect that, the timeline for execution of this will be 10 years, including this order, blended margins will stand at what percentage?
See, blended margin exactly would be difficult to quantify, but as I said, it will definitely improve our overall blended margin. And since we are confident that we can complete this contract well within timeline, and even in time of 10 years, probably it will also add a great amount every year in our top line going further.
How quickly do you expect to start executing on this?
Right. So, as per our internal estimate, it will take 9 to 10 months to start revenue out of this particular contract. So, we believe revenue from this particular contract will start from next financial year.
Mr. Shah, now in terms of your, overall order book, could you maybe give us a sense in terms of how you expect the entire order book to grow to, as well as the segments where you see, more orders coming in terms of your bidding pipeline? How does it look like right now?
Right. So, at the end of Q1, our total order book was standing at around 1,250 crores. And with this single order, it would be doubled, more than doubled. And we believe the growth is coming from all different verticals, including this new vertical of production enhancement contract. So we are expecting few good more contracts coming and will be added to our order book in coming future, probably in next 3 to 6 months. We are expecting good amount of bidding pipeline conversion in our regular business verticals as well.
Also, Mr. Shah, just with regard to your timelines again, you've suggested you'll start extraction from this new well maybe 10 months from now. So how does revenue therefore start to accrue? Will it be linear over the 9 years thereafter, or will you front end some of it, or will it be back ended? How will it work in terms of top line?
See, generally it will start from low and it will have a bell cow type of production. And so it would be then be on peak in immediately 1-2 years. And it will be there for few years, and over a period of time, it will start reducing. So we believe a majority of revenue would be more or less front loaded.
And Mr. Shah, considering the kind of, order wins that you've secured and the kind of growth that you've seen, I want to understand that so FY24, you've roughly done revenue of 427 crore. So from a longer term perspective, I want to understand that by the end of FY26 or 27, where will the revenues be at? What will be the number like? And also the bottom line then?
See, to quantify exact number would be difficult, but we are quite bullish on our growth numbers, and we believe we should grow at least more than 35 to 38% even in FY25, and similar amount of growth we are expecting in FY26 and 27 as well. So with an opportunity of adding few more such production enhancement contracts in coming future, this growth percentage can even go for higher.
Got it, Mr. Shah. You said 25% growth in the next 2 years. From which segment will this be coming from? How will your margin profile look like? Will we see more focus on natural gas compression and natural gas dehydration, which are your higher margin segments, or is there an optimal mix you're targeting?
Yes, so growth is coming from all different segments, including gas compression, dehydration, and drilling workover. Along with this, we have also entered into different value-added services, one of which is charter hiring of entire gas processing facility, which is again a unique concept introduced by us recently, where we are converting EPC opportunities on charter hiring basis. And that is also a great push which we are expecting for that particular vertical as well. So growth is expected from all different verticals which we are into, and the additional vertical which we are adding with this contract of production enhancement as well. So all put together, we are expecting 35% type of growth.
Okay, and Mr. Shah, so for this particular order win, is there any capex that you're going to plan to do? And if yes, what will that amount be like? And secondly, how will you be funding that capex?
See, we are into this business for more than 3 decades, and we are providing almost all services which are required to increase the production of this particular field. So largely we would be using our own equipment and our own services to increase the production out of this particular field. And if required, we'll do further capex as well. But as of now, it is a little difficult to quantify because this contract would spread over almost 10 years.
All right. Just overall picture, Mr. Shah, I want to get this absolutely right. So you've got a top line of roughly 450 crore currently. You'll likely go to closer to 1200 crore maybe by FY27 at the growth clip that you're expecting, roughly 30-35%. And you'll do a 40% margin on that. Is that the right way to look at this?
Yes, of course. We are gunning for it.
Right. Okay. Very, very interesting. 3,000 crore in terms of market cap and extremely robust in terms of growth. So thank you so much, Mr. Shah. It's been good chatting with you.
Thank you.